So let's take a look at an example of how I drew my levels on a recent trade which I took. So this is on dollar yen trading on the H1 level. So how did I again identify this setup? Because on the H4 time frame, dollar was the strongest currency, yen was the weakest currency. So I looked to go long on the dollar yen on a lower time frame. So I drilled down to the H1 time frame and I was watching it to see if there was a trade setup. So over here you can see that it was moving sideways and there was a level of resistance at 111.43. Okay, so I kind of like watched that level to see if we have a breakout and we have got a move up. So let me just scroll to the right and show you what happened then. Okay, so you can see over here, excuse me, it started moving up. Okay, so you may say, okay, so could that be the swing high? All right. Now, to know that this is a swing high, you have to wait for the next candle to close to make a lower high, right? So this looks like a swing high. So could this be our A? Could this be our B? Right? So could we buy on a 50% retracement? Now, from my experience, I can tell you that this swing high is not high enough, all right? But again, after a while, you will be able to see that. Now, if you can't see that, well, you could always draw the Fibonacci. So go to your Fib tool over there, click on the Fib tool, and click on, let's remember this is A. A is the resistance, B is the swing high. So we click on B, we drag to A. So click on B, right, and drag it to A. There we go. So let me zoom in a bit. Now, can you see 50% over there? If I can draw a line. Okay. So this line is where the 50% retracement is. Now, remember that we want to make sure it retraces at least 1 ATR or 2 ATR. Okay. So in this case, what's the retracement? From here all the way to there, the retracement is only 7 pips, right? You see 73 there, right? So the 3 is the so-called the micro pip, okay, or the fractional pip. So look at the 7. So this is a 7 pip retracement. But what is 1 ATR? So if you take a look at the ATR indicator over here, okay, look at the second, or rather look at the first and second decimal place because it's a yen pair. Remember, for yen pairs, 1 pip is the second decimal place. So the ATR is 9 pips. Can you see 0.09? 9 pips. So this retracement is only 7 pips. So we don't even get 9 pips. We don't even get a 1 ATR retracement, which means that this can't be used as a swing high. Okay? So let me delete that. Let me delete that. So that can't be the swing high because it's not high enough that we get at least a 1 ATR retracement. So that's how you can check if you're not sure. But from experience, I can tell immediately that it's not enough. All right. So let's move on. And sure enough, it's going sideways again. Went back below the resistance again. Okay, boom, right. Now over here, what happened? Over here, you can see that it broke out again. So this is another breakout, okay? So this time, is it high enough, right? Is it high enough that this could be the new swing high? And we could get 50% retracement with at least 1 ATR. Well, let's check it out. So I'm going to click on my Fibonacci tool again. And again, drag from B, that's the B, right? B is the swing high. Drag it to A. Where's A? A is the resistance level, okay? Now, so can you see the 50%? That's our 50%, okay? So that's where we could place our buy order. Now, first of all, remember what's the rule? The retracement has to be at least 1 ATR and at a support level. Or if there's no support level, then it has to be a 2 ATR retracement. Now, do we have a support level? Yes, we do. Let me draw. Okay, so this line that I drew, let me make it a dotted line so it's okay, so that's the dotted line, right? So this is where I intend to put my buy order, at the dotted line. So let's measure from the top to the bottom, or rather to the 50%. How many pips is that? It's about 10 pips. Okay, 10 pips. What's the current ATR? The current ATR is 7 pips. So good. This retracement is more than 1 ATR. And is it at a support level? Yes, it is. Why? Because can you see that this was a new resistance? Resistance, resistance, right? This was a new resistance. And now this resistance has become a support level. Beautiful. Okay, so always ensure that when it retraces to the 50% level where you're going to buy, that buy area should be a level of significance as well. That means it should be a previous resistance that has become support, and at least a 1 ATR pullback. Okay, now if there isn't any kind of support over there, if it's purely a 50% retracement, there's no support, you could still take it, but you have to ensure that the retracement is at least 2 ATR. But in this case, we have got that level of resistance and support. 1 ATR is fine. Okay, so this could be a potential place that we place our buy order. Okay, great. Now, next, where do we place our stop loss? Our stop loss would be below this level of resistance, right? Let me just draw it out. Okay, so this is the, we call this A, we call that B, and the 50%, this is our entry price. We're gonna place our buy limit order over there. Okay, now our stop loss, recall, will be 5 pips below this level of resistance and support. So what's this? 111.43. So 111.43 minus 5 pips, what's that? 111.43 minus 5 pips. That's 111.38. Okay, so let me draw. $111.38. There we go. Right. So this would be my stop loss. Okay, and this is my 1 hour distance. So my 1 hour should be at least 2 ATR. So what is 1 ATR again? We checked it just now. 1 ATR was about 7.6 pips. So times 2, that's about 15 pips, right? So from here to here, is it about 15 pips? So drag it. It's about 14.6 pips. Yeah, I mean, thereabouts, about 15 pips. So it's fine, right? Roughly it's fine, right? So good. Our stop loss distance is big enough because it's roughly about 2 ATR. Okay, got it? Now, next, where's our profit target? The profit target is at the 161.8 level. Okay, now you can't see because it's somewhere up there. So what you can do is click, let me remove all this first. Click on your MT4 chart, click on this space here and drag down. Okay, let me show you. Drag down. There we go. So can you see? I can drag the charts like that, right? Drag it, right? So there, that's your 161.8. So that is where I will place my profit target. Okay, there we go. So profit, oops, sorry. So profit target will be placed there. All right, so let me remove the Fibonacci so that it's less cluttered. Okay, so once again, let's review what we have done. We have determined our entry price is there, our buy limit order is there, correct? So that's this dotted line. This is our stop loss, and this is our 1R. Okay, our 1R. And our profit target is here, determined by the Fibonacci 161.82. That's our target profit. Okay, and if you measure this, how many pips is that? This is roughly about 22 pips. Okay, so our stop loss was about 15 pips. Our profit target is about 22 pips, so 22 divided by 15. In this case, we are aiming for a 1.46R profit. Okay, so we're risking $1 in a sense to make $1.46. So that's fine, as long as you're making more when you're right and losing less when you're wrong. That's a fine trade. Okay, got it? Great. So let's see how this trade played out. Okay, so sure enough, it retraced and it hit our buy limit order at 111.53. So we're in the trade. Let's see what happens. Boom, goes up. There, hits our profit target at 111.75 and comes back down again, right? So you can see that this 161.8 level was a pretty significant level, right? Because it hit it and then came back down again, right? So it's a pretty significant level using Fibonacci to determine our profit target. All right, so let's take a look at some more long trade examples. On the 23rd of April, I was looking at the currency strength meter on H4, and I noticed that the Canadian dollar was very strong, again above 60, and the franc was very weak, below 40. So I was taking a look at the CAD franc charts, looking to short the CAD franc currency pair. So the first thing I do is I look at the H4 time frame, and I want to see that the CAD franc is on a very strong uptrend. So again, as you can see, the 6 EMA above the 18 EMA, 18 above the 50, and the price clearly above the 18 EMA. So H4 very strong, and then I drill down to the lower time frame to look for the setup. So again, the lower time frame I look at would be H1. Okay, there we go. Right, so I'm now I was looking at a H1 time frame again on Canadian franc. So the first thing I do is I draw the level of resistance. Okay, so I saw very clearly there was a level of resistance at 7595. So you can see there's a resistance over here, and I drew that level of resistance, waiting for a clear move or breakout above that resistance. So over here, you can see that the price started moving up very strongly above resistance. So I mark point A as the level of resistance, or the point where the price starts moving up. That's my point A. So as it's moving up, what am I doing? I'm waiting for it to reach a swing high. And once it reaches a swing high and starts retracing, I want to get in at a 50% retracement. Okay, so it goes up, and over here, I designate it to be point B. Okay, now some of you may be thinking, okay, in real time, how would you know that this was not the swing high? How do you know that this is a swing high, right? Good question. So the answer is very simple. Initially, when the price went here and I saw this red candle, yeah, initially I thought that this was the swing high. So what I did initially was I marked this as B, as a swing high. But then what happened was, after the red candle, boom, we had another bullish candle that made a new swing high. Okay, so the point is you have to keep adjusting it. Initially, you may think that that's a swing high, and then it makes another high. Then you say, okay, that's the new swing high, and you just keep adjusting it until you find that that was really the swing high. Make sense? Okay, great. So the moment it hit that highest point, and the next candle was a bearish candle, making a lower high, I thought, okay, this would be probably the swing high. So I marked that at point B. There you go. So I've got my A, I've got my B. What do we do next? We use our Fibonacci tool and we click on B, right? And we drag to A, which I showed you on the charts initially, right? So once I dragged it, two levels will show up. The first level is the 50% level, which is 7605. And next is the 161.8 level, which is 7627. So immediately I'll know where's my buy point, my buy limit, and my take profit. Now, the other thing to ensure again is at the 50% retracement, okay, it should either be at a support level with a 1 ATR minimum retracement, or if there's no support level, that's fine, but it has to be a 2 ATR retracement. So in this case, at the 50% retracement, is there a level of support? No, there isn't, right? So I have to make sure it is at least 2 ATR. So I look at my ATR indicator below, okay, to check what is 1 ATR multiplied by 2, I get a 2 ATR. So sure enough, this retracement from B to the 50% was at least 2 ATR. So I said, fine, I can place my buy limit order there. So my buy limit order is at 7605, waiting to be triggered once the price reaches that level. Got it? Okay, good. Next, where do I place my take profit? At 7627, which is where the Fibonacci tool shows me it is 161.8. Next, where do I put my stop loss? So my stop loss will be placed below the resistance level, which is in this case 795 or 7595, right? So I put my stop loss, it could be 5 pips, could be 10 pips, below that resistance level. So in this case, the resistance was at 7595, and I put my stop loss 5 pips below that at 7590. All right, just about 5 pips. So measuring from 7605 to 7590, that is 15 pips. And 15 pips is more than 2 ATR. Remember, your stop loss distance should be at least 2 ATR. So that's fine. So I'm risking 15 pips on this trade. Now my profit target is at 7627. So I take 7627 minus 7605. I've got a profit target of 22 pips. So I'm risking 15 pips to make 22 pips. So 22 divided by 15 is 1.46. So in this particular trade, I'm risking 1 R to make 1.46 R. Okay, so reasonable trade. Wish it could be higher, but it is what it is. If you want to take it, you can still take it. I took it. Yeah. So what happened was the price indeed went down, and it went down to 7605, triggered my buy order, went down a bit lower than that, and then went up and hit the profit target of 7627. Okay, so this was the 23rd of April CAD franc trade on H1. Okay, so this was a trade I took on the 10th of April. And again, it started with me looking at the currency strength meter on H4. So on H4, I saw that on that day, Aussie was strong, which is 60 and above, green. Franc was weak, red, and below 40. Okay, so I was looking at buying the Aussie, selling the franc, or rather going long on the Aussie franc. So I checked the chart. So first of all, I look at the H4 charts. I want to make sure that it's on a very clear uptrend. The 6 EMA above the 18, check. 18 above 50, check. Price clearly above the 18 EMA, we got it. Okay. Then I drill down to the lower time frame, which in this case it's H1, looking for the setup. There we go. So now I'm looking at H1 and looking at Aussie franc. So first thing I do is I look at the level of resistance. So in this case, strong level of resistance at 7128. So you can see that was drawn over here. Now over here you can see that there was a breakout. Okay, there's a breakout over here. And so some of you would ask, okay, why didn't I take the trade as it retraced 50% over here? Well, actually I attempted to, but it was not valid. Why? So initially when it broke out, I thought, okay, this is the swing high, correct? So that's A, that's B. So what did I do? Took my Fibonacci tool and I clicked B, drag to A to get the 50% retracement. So my buy order should have been here at this line, right? Buying over here. But I found it was not a valid trade. Could you guess why? Right? Remember that the retracement from A to your entry point has to be at least 2 ATR. Or it could be at a strong support level and at least 1 ATR. In this case, you can see that the retracement here had no level of support. There was no support level. So it had to be at least 2 ATR. So in this case, the retracement was not 2 ATR. It was not a big enough retracement for it to be valid. So because of that, this was not a valid trade. So that is the why. At the end of the day, I did not place a buy order. Okay. So what happened was it came back down again. Okay. So in a way, this was like a failed breakout. Okay. And then a couple of candles later, boom, it broke out again. This time broke out, boom, very, very strongly. And I thought, okay, this is obviously a very strong move. If it retraces, I can definitely get at least a 2 ATR retracement. Okay. So it broke out here. And again, my A remains the same. My A is at the resistance 7128. Okay, that's my A. Okay, so it goes all the way to the swing high. Now again, you can see that initially I thought that the swing high was here, right? But then what happened was it went down and went up even higher. So I readjusted my swing high to be at B over here, the top of this impulsive wave up. Okay, so once I've identified my A and B, what do? Take my Fibonacci tool, click on A, which is the high of this candle, drag to, or rather click on B, which is the high of the candle, drag it to A. So once I drag it, I get to see the two levels again. First level is the 50% level at 7142, excuse me, and the 161.8 level, which is 71745. Okay, so this would be my profit target at 7175, and my buy entry would be at 7142.7. So I rounded it to 7143. Okay, now was this a valid retracement? Again, remember, what's the rule? The rule is it should retrace to a support level with at least 1 ATR. Or if there's no support level, it must retrace 2 ATR. Now in this case, guess what? It met both criteria, because you can see that this here, right, the price went up, hit a resistance and came down. So this resistance is now a support level. All right, very good. All right, resistance becomes support. So in this case, this 50% retracement is a significant level because it's a level of previous resistance becomes support. Okay, so that gave me more confidence that this was a significant level. Not only that, but from B to 50% retracement was 2 ATR. So it met both criteria. So I said, okay, great, that's a strong level. Let's place our buy order there. So buy limit was at 7143, waiting for it to trigger once the price got to that level. Next, where do I put my stop loss? Again, stop loss is placed below the resistance of 7128. So my resistance was 7128. So I put a stop loss about 5 pips below that, 7123. So that's my stop loss. Okay. So between 7143 and 7123, this was, yeah, 20 pips, correct, 20 pips, which was at least 2 ATR. Okay. So in this case, I'm risking 20 pips. And from my buy price of 7143 to the target price, 7175 minus 7143 is 32 pips. So 32 pips divided by 20 pips is 1.6. So risking 1 R to make 1.6 R, pretty decent trade. Okay, so I placed my order, waiting for it to be triggered, and the price went down, boom, triggered my buy order. Of course, it went a bit lower. You can never tell how low it's going to go. And then went up and proceeded to hit the 7175 profit target. Okay, so this again was a very textbook classic trade.